Itself, the roadshow for its initial public offering that's already begun with a valuation that could bring it north of about $23 billion when all is said and done. To Agora financial market strategist Alan Nuckman. Obviously a lift to that issue when it comes, and maybe a lift to the market. What do you think?
Well, I think Lyft is just the beginning. This could be a big year for IPOs. Obviously, Uber's coming after this somewhere along the line, but you also have Pinterest, Airbnb, and what's this last one, Postmates, where they deliver things to your home. They all have very questionable business models that don't make money right now, but let's remember that it took Amazon 4 full years to turn a profit. So if you've got deep pockets, you can do this.
Obviously, a lot of these were stalled when we had the government shutdown for better than a month, so they were waiting at the gate. And now, you know, they're getting ready for liftoff here. I'm just wondering, how do you think they'll be received? I know they're very different cases there, but Lyft and Uber will be very similar, obviously. But what do you see, given the pent-up demand for these things?
Well, there's still a lot of money out there. These IPOs really allow the early investors to cash in. If you look at Lyft, they need money. They're down to $500 million in cash or something of that nature. So this is going to bring them $2 billion. So that's what they need to do. They need to unlock their values at these levels. Now, how much the market's going to accept this is a whole other question. Like I said, I think it's interesting that you've got these companies that are losing money, but they try and make it up on volume. So that doesn't make sense. But eventually they can turn the corner, and they're just trying to buy time, and that's what this allows them to do. It gives them a little bit more time to keep playing this game.
How do you like the market right now? A lot of people have been focusing on the fact that not only do they not expect the Federal Reserve to hike interest rates this week, but that maybe not at all this year, that things have slowed down enough. Bond yields are now at their lowest level of this year. Things look kind of hunky-dory.
You're the one saying it. I don't even have to say a word. Exactly. We've talked about this before. We're not raising rates. Corporate profits are great. And things are smoothing out right now. We had that unwind, and that looks like an opportunity. Every time in history so far, the markets have bounced back the distance of that sell-off. That would send the Dow to 35,000, which is 25% above where we are right now. So if you want to get back to Lyft, I think the big winner in the Lyft situation in these IPOs are going to be the banks. Keep an eye on the banks. That's where we keep money, and the banks have PE ratios down around the 10 level, so they're not really valued very high, and they have a lot more upside. They're about 10% off their highs that were made in January of 2018. So with all these IPOs and a lot of fees, the banks are going to get 5 million shares out of this Lyft situation. So they get paid as well on these rollouts. So there's money to be made there. Let's remember the banks made $236 billion in profit last year, and they're still significantly below where they were in 2009, so they never came back like the rest of the market. Keep an eye on the banks. They could be booming once again.
All right, Alan. Always good talking, my friend. Alan Nuckman follows this. He was bullish back in December, or a few people were. There's one other guy now who was very bullish back then. That's the guy who's going to be hosting it through the next hour, Charles Payne. But just to put this in perspective right now, we have a market that's doing